Good morning. Welcome to Stock Market Today. It's Tuesday, November 17th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and those hit your inbox every trading day before the market opens. So, U.S. equities finished higher again on Monday on the heels of Moderna's vaccine announcement. The S&P 500, Dow Jones Industrials, and the Russell 2000 setting new record closing highs. Rotation was again on display as energy and industrials led the broader tape. Healthcare was the only sector lower on the day. And watch healthcare today as news out this morning that Amazon is rolling out a digital pharmacy. So pay attention to the healthcare space. Going to be a lot of moving parts in that group today. Treasuries finished unchanged. Dollar was weaker against the euro and yen. Gold was up 10 basis points. Crude oil was up 3% on the day. As we get to the desk this morning, a little bit of a give back. Futures down about 40 basis points after Asian markets were mostly higher overnight. Japan outperforming, while China and South Korea did close lower. European markets are mostly lower. Treasuries are stronger across the curve. The dollar is weaker on the majors. Gold is down 10 basis points. WTI crude is down 20 basis points. As we dive in here, I'm kind of jokingly asked the question, should we swap in DIA for the Qs? That would be to make everything look like, at new highs, right? We're not going to do that, although I do highlight the diamonds in my note today, something we don't often do. Just for on a closing basis, though, SPY, IWM, and the diamonds, DIA, new record highs on a closing basis. As we look at the SPY support now, I guess we'll call 360 near-term support, then 340 below that. The Qs, 260 is still the line in the sand. We're still consolidating. As long as we're above 80, odds favor the September highs, but we're not there yet. IWM support at 170. We're above the 2018 highs. Song remains the same with some follow through there. Yesterday, we're going to want to see now. Well, we want to see 170 hold on any kind of pullback. I think that's important to keep the structure of the near term uptrend in place. So that's what we'll be watching here going forward. And that's it. Maybe we'll get to a point where we have to swap the Dow in instead of the Qs, but I don't think we're there yet. Let's hit our market in a minute. What are we writing about today? Well, Moderna Vaccine sends markets to record highs. We touched on that. Sector rotation remains a theme. And I'm wondering if the financials are next. Remember, we touched on materials, we touched on industrials, and we've been slowly coming around as the leadership has shifted. Well, financials are on the verge. We're going to take a look, and the banks are already there. We'll take a look at the regionals as well. In our screen today, we're going to screen for potential new leadership. I'll talk about what that means. Europe on the verge of outperforming ASPY. I think an interesting development here as well. Everybody's focused on the large to small growth to value rotation. I think one of the areas people should start to get their attention is the U.S. rest of world rotation that's potentially playing out. Starting in Asia, and we're on the cusp in Europe, which is really interesting. Remember, there's no rule that says you have to keep all your money in U.S. assets. Right? There's opportunities to take advantage of what's happening globally. And with ETFs, it's a lot less difficult than it used to be. So I think it's important to pay attention to that. As we said, futures do point to a lower open here today. Taking a look at the major indices now from a power bar perspective, the Dow 3-0, bulls to bears after adding 1.7%. S&P up 1.25, 135 to 35. NASDAQ, your laggard, only up 78 basis points, 17 to 11, bulls to bears there. Small caps, your big outperformers once again, 828 to 186, bulls to bears there. Bonds down, take energy, your leader. XLE up 6.6%. We now have 3 bulls and 3 bears in the energy complex. So hopefully those of you who have been following can see it. It's not all in, all out. It's not all growth, all value. It's a rotation, and it plays out over time. All right, June, July, materials, August, industrials, more recently, banks, and warming to the financials. And we got to start paying attention to what's happening in energy. I'm not going to lie. I've been a hater for a long time, but I'm not dogmatic. And we're going to pay attention to what's happening here. Hitting our stocks of the day now. I said we were going to do a screen. So this is a screen that I've built. I call it money flow and relative strength turning. So just given the rotation that's playing out, I wanted to start with a wide berth. So our universe is the Russell 3000. Let's keep it broad because growth, value, large, small, right? We got a little bit of everything here. I want stock rating. I want neutral plus or better. So neutral plus, bullish or very bullish in our 20-factor model. And then I want names where there's been a 1-month high in money flow persistency, right? So recent bouts of accumulation based on the Chaikin money flow indicator. And then I want names where their relative strength against the SPY turned strong within the past week. So if you kind of conceptualize what that is, bullish and very bullish stocks that are seeing accumulation and are now beginning to outperform the market, right? That's how, I mean, I'm open to ideas, obviously, but I think to me, that's an interesting way of trying to capture the rotation at the sector level and bring it into stocks. And I think it's really interesting because if you look at the 45 names that pass the screen, you're going to see a lot of banks, PNC, Bank of the Ozarks. I mean, a ton of banks. Baker Hughes is energy. Okay. But for the most part, you're seeing the banks. A couple weeks ago, we highlighted the banks in our note to clients. We're going to take a look at the banks a little bit later on here in the show, KRE. But kind of fascinating that we just said, now we're looking to the financials and we run this screen of potential new leadership and it's littered with banks. So take a screenshot here and potentially do some work on these names. Let's take a look at our sector tracker now. Movement of the last 5 days. Energy, staples, industrials, and REITs at the top of the list. Fins, Utes, and comms, middle of the road. Discretionary tech, materials, healthcare at the bottom of the list. Everything higher over the past 5 days of trading. Day to day, not a ton has changed. We know what's going on here. So we're watching the rotation. We're seeing it play out. We're skirting to the relative strength. That's all we're doing. Always skirting to the relative strength. Speaking of which, to our industry in focus, regional bank services, which past 6 months been a winner. Outperformed the S&P by 23% over the past 6 months, has 90 bulls and 0 bears. Actually went on Fox Business News last week and talked about this group. Power bar ratio, obviously very strong. It's number 1 of 21 subsectors. It's moved up 3 slots over the past week. So there's 90 names here that are bullish, right? You're going to want to do the work or maybe just look at the fund itself. I personally will tell you that given the rotation, given the move, given how many names are in this group, what I did was I just grabbed the ETF. I just grabbed KRE after I highlighted it for our clients about 2 weeks ago on a relative strength change that I'm going to show you. I just grabbed that. A lot of names breaking out. For me, it didn't have the bandwidth to actually sit there and go through them all. So I just said, you know what? I want exposure. I see this theme potentially shifting. I want exposure. I grab my exposure. And now from there, as things settle out, we can start to look at the stock level. But, you know, take a look at the fund here. Very bullish, strong trend. Nice base. We're breaking top side. And here's what I saw that I liked, that I started writing about it a couple of weeks ago for our clients at Chaikin Analytics. Massive underperformer, personality change. We're now overbought. Money flow's mixed. I'd like to see the money flow be a little bit better on the fund itself, but there's no denying the fact that stocks are breaking out. The fund is breaking out. Hopefully it's not a false breakout like it was at the end of 2019. But there's always a risk, which is why you have a risk management process. But this in the near term looks compelling. So I grabbed some. We've been highlighting it. We've been talking about it. Let's take a look at our trending names now. Yesterday's S&P 500 movers and shakers, our gainers and losers. FTI, Slob, and National Oil Well Varco, NOV, all energy related, right? Big move in energy. Yesterday, up over 6.5%. Carnival, up on the vaccine news. Didn't see anything company specific on the Gap, GPS. That stock has been an absolute monster. And I've missed it. I mean, stock's done nothing but go higher, especially since announcing the collaboration with Kanye. I missed it. I can't believe it, but it's been a great looking stock if you look at the chart. Loser side of the board, Illumina, didn't see anything news there. FBI search weighs on FE. Pfizer down with the Moderna news. Northrop LifeLock and Dentsply. Didn't see anything company specific to take those stocks down a little over 3% on the day yesterday. So a lot of moving parts. The rotation continues to play out. But let's dive into the charts now, where we can see things from another perspective. Here's the chart of the Dow Jones Industrial Average. I don't pay enough attention to it, and 30 stocks. But we're trading at new highs here. We're on the verge of trading at 30,000, above the 50-day moving average, above the 200-day moving average, which acted as a springboard is on the most recent move lower. Topside breakout. To me, what we're seeing, I think this is part of the rotation, because you had the SPY and the Qs. They made new highs back in September. The Dow did not. So now it's breaking out, right? So I think that whether you pay attention to the Dow or not, some people do, some people don't. Some people look and say, it's 30 stocks, and the universe is much bigger than that. And I'm not saying one is right and one is wrong, but what I'm saying is take the message. And the message is a broadening of participation to the upside, right? I think a big part of the bear case from the March lows to now, or to more recently, was that, there was no breadth, that the rally was being led by the mega cap growth companies, the fan mag type stocks. And there was some merit to that. Leadership was certainly concentrated. But now it's not. Now it's not concentrated. So if you were bearish on equities as an asset class, and your main thesis was narrow leadership, why would you, if you're still bearish, you have to ask yourself if you're being intellectually honest, or if you're just anchoring to your call. Leadership is no longer narrow. It's broadening out. And I think that that's really interesting. You can see it in the small caps. You can see it at the country levels as well. So it's not just US, it's equities as an asset class. And I actually think we're at a point, like I said, where it makes sense to be paying attention to some of the trends that are playing out outside of the US. Take a look at Europe. Europe kind of looks like the small caps, doesn't it? On the verge of taking out its highs from January and February of this year. It didn't do it. While everything else was rallying, Europe was struggling. Had the initial rally, then went into a consolidation. Now we've broken topside from that consolidation. For the classical chartists out there, the top is 55. The bottom of the range is 49. So that's 6 points wide. Add 6 points to 55. You have upside to 61. So if that does play out, you also have new highs. You have new highs above these new 52-week highs above these January, February levels. And take a look at what's happening at the bottom of the chart, more importantly. VGK potentially breaking the downtrend relative to the S&P 500. Now, if you look at Japan, it's starting to outperform. China's outperforming. A lot of parts of Asia are outperforming. Emerging markets are outperforming. If Europe gets in gear as well, think about what that says about equities as an asset class. Think about what that says about the rotation away from what everybody's talking about. Nobody really talking about this international rotation. So we're going to start to talk about it a little bit. It's something that we're starting to pay attention to, but VGK, keep an eye on it. And then we'll leave you with the financials, rounding bottom on the verge of taking out the 200-day. Take a look at KBE. Those are the bigger banks. Breaking topside, all while the RSI shifts. So that's the one we're watching next. I hope everybody has a great Tuesday. Take us for a test drive. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.